and then the market again finds resistance over here. Now, how do I apply additional trading tactics? Well, if I'm still bullish, then what I can do is move my point above the high of that bar. If the market's going to break out, I'm going to need it to break out above this bar before I can go long again. Okay? Then you can see the market trades down right back into support again, triggering another possible 3-bar reversal. But here's the important thing to remember. The important thing to remember is we're still outside of these main sweet spot hours. Yes, the market is open. Yes, the London traders are active. They could still be working customer orders. But is it at a time where you know you're going to have a big chunk of traders back of your trade? That's the key. So even though the market is here and it's at support, and it eventually does develop a good 3-bar reversal, you can see right about this bar here, 1, 2, 3. You've got the break point somewhere up here, because at this bar, 1, 2, 3. Well, I guess right there. There would be your entry point here, and you can see you could have gotten in there. It depends on how conservative you are. If you're waiting for a close above the high, no, you wouldn't have gotten in. You wouldn't have gotten in until possibly up here. But the key here, putting that all aside, the nuances of getting into a position, here's the key. It's down here, guys. You're outside of the next sweet spot period. Remember, you've got the first sweet spot right here, 3 to 4 a.m. After 4 a.m., the activity is just going to die down. So 5, 6, 7, 8, there's just not a lot going on. Now let's take a look at what happens as we come into this 9 a.m. hour. You can see the market again starts to consolidate. Now this is why I like trading the New York session better than the London session, because I know that I've got customer orders coming in at 9. I know I've got potential options barriers at 10, and I know by 11:30 the London traders are going to get out of the market. So I've got a solid 2.5 hours to look for particular trades. And let's take a look at what happened. In fact, I was on the phone with one of the members as this bar was forming and pushing to the downside. And I remember when I hung up the phone with him, the first thing I thought of was, look at how the market cannot break through support here. We're still well within the sweet spot period. In fact, we're coming into another very active part of the day at 11:30 when the London traders are squaring up their position. So the first thing that I thought of was, man, this market's more than likely going to go up because it's happening at the correct time of the day. You've got the possibility for a move. And by this time, 1, 2, 3, look at where the reversal is. Very, very close to the market, very, very close to support. In fact, even if you were stopping out way down here, which you wouldn't necessarily have to, 22 points worth of risk. Now, you can see that the market does manage to take off. Yes, there is short-term resistance here on the 15-minute bar, but again, this is where you've got to then look back. Don't get so focused on the 15-minute chart that you forget about the hourly bar or even higher. So let's talk about this. Let me move this down. Again, this is a thinking man's game. We've got to think about these positions and think about what we're doing. You can see here, in fact, let me match it up with the cursor, just so there's no confusion. Okay, 3 a.m. When we were initially talking, here's 3 a.m., here's 3 a.m. As the market starts moving over, remember this low, okay, right here and right here is happening outside of our sweet spot hours. As the market starts to move up, you can see here we're moving into 9 a.m. Here's this one spike up. You can see the market comes down. This is happening, again, before our sweet spot period, or in the sweet spot, but outside of our active trading zone. But then you can see here, right at 9 o'clock,